Good, good. Okay. See, today's session is going to be like, see, basically what I thought is like just to have that momentum. Okay. Last week, many of the folks might have had an impression saying that I'll like kickstart with all the strategies, right? So just to have that momentum and just to give the benefit of doubt for all the new traders and also for the existing traders so that you all can watch this debit spread, ratio spread, your price action along with the strategies based on the VIX for options and also for the swing traders. We discussed price action and the swing video. So today we will just discuss about few of the adjustments on the debit spread. So that let me share my screen. Okay. Participant can now see your screen. You are able to see my screen, right?
Yes.
Yes.
Okay. See, basically, you all guys can go on the mute. So basically, what I want to do today's session is like just we'll have a very short video wherein I'll be like showing you a few of the debit spread adjustments. So is my screen very dull or is it like visible for you all, or it shows like grayed out or dull? Because I'm just
It's perfect. Screen is perfect.
Clear for me.
Okay. So because I'm using a anti-glare, just so maybe you might have see some brightness low, but manageable, right? Okay.
Yeah, perfect. It can't be better than this.
Okay. So what I meant to say is like, see, now I'm just trying to show you a simulation for this market, which is the recent week. We will just deploy a debit spread on 22nd of October and your end date would be 3rd of November. So we all know, right? Whenever we deploy the debit spread, it is a clear cut saying that the debit spread would definitely show us the loss because what the debit spread need is the momentum market. So what I've done, so we have 77. Anyways, the session will get recorded. I can share with all the participants. Now, see, I'm not at all focusing on the chart section. So you guys can just stay focused on the content. So what I'll do, I'll just deploy a debit spread on what is that 27th. So let me show you the calendar. 27th would be this one. Okay, Thursday at 3 p.m. and the expiry would be 3rd November. Because if you look at the sensible, this is the last date what we have, November 3rd. All right. So that's the reason I'm just taking the recent week. We all know the moment we deploy the debit spread, this would give us the loss because debit spread requires the momentum. So I've taken the Bank Nifty. I'm into simulator. Okay, the start date is 27th and the end date is 3rd. And this is just a short session, but we are not going to deploy the trade on every Thursday. I'll show you what is the best effective way of deploying. So that we'll discuss in the upcoming classes. So now what I'll do, I'll take you to the one day. I'll come to 3 p.m. Okay, so this is my 3 p.m. So now we are on 27th. I'm just trying to deploy a debit spread. So now market stands at 41,278. Well, let's take it as a 41,300. Okay, 41,300. This is so what I usually do. See, it all the premium selections, everything we'll discuss on in the next Sunday class. But I'm just telling you how to deploy the debit spread is like basically I look out for like 230 to 240 or 230, 250, 260, or else I look out for 5 strike. This is the ATM, right? So 1, 2, 3, 4, 5. So this is 253. So either I can go for 253 or I can go for 218, but just because the VIX is high, so we are getting the good premium. So I'll go for this thing. I'll buy this. Okay. And then I'll go for 500 strikes and I'll sell it 1, 2, 3, 4, 5. Either I'll go for half of 250 or else I'll just go for like 5 strikes so that the scope is big for me to do the adjustments because I'll be having 500 spread difference. All right, so I'll sell this. So this is your typical debit spread. All right. So if you look at the risk to reward, perfect, right? 3,500 and almost like 8,000, 9,000 is risk to reward. So almost like 1:3, close to 1:3. All right. So now we all know, if you look at the market condition, this is where we have deployed at 315. Okay, 27. This is where we have deployed. So market came down and it went up. Again, it came down. It went sideways, and this is where it expanded. You look at this thing, third. So market started almost like we are starting at this position 315, right? Maybe this position, and the market is also ending at the same position. So now what I'll do, I'll just quickly take you to next one day. Right, 1 second. Okay, now what I'll do, let me get it to this side. Okay, so now I'll take you to the next day. Okay, just keep an eye on this profit and loss. I'm taking you to the next day. Right away, the loss is 1,527 because we are expecting the market to go up, but we all know during that particular week the market was sideways. So we are on Friday, 28th. Let me take you to Monday, 31st October. The loss is almost like 1,000 plus. Day 3, we are on Tuesday. Expiry is on 3rd, so we are on the almost like even this shows the loss. Check the market also. The market stays as it is, right? It was sideways. It almost shows like 2,000 plus loss, and on the expiry date we are at the maximum loss. Okay, so now what I'll do, again I'll take you to the day 1. So basically what I do is like, whenever I deploy a debit spread, okay, so this is my day 1. Okay, so I've deployed a debit spread on that day, so I'll not do any adjustments in my debit spread on the, especially on Friday. So we will discuss everything in detail on Sunday. I'm just giving you just to keep the momentum up, right? So what I thought is like, let's have a session. So I'll take you to the next day. This is Friday 3 p.m. I'll not do any adjustments, though I see the loss, because post Friday we have the weekend, Saturday and Sunday. We all know, right? Saturday and Sunday the SGX Nifty. If I'm not sure whether it runs on Sunday, but definitely we have the weekend impact. So let's say the market is flat, so either the market can go down, we can have a gap down, or else the market can give a gap up, because we all know weekend. We all call as theta decay. We say that post weekend Monday the market will be like very volatile. It can gap up, it can gap down. So that's the reason I do not do any adjustments on the Friday, but still I have the loss. Anyways, my loss on the debit spread is limited. So what I'll do, I'll take you to the next day. Okay, so 31st is the Monday, but still I have the loss. So now this is very important. So now what you have to do is like, what debit you are giving. Okay, so you are giving almost like debit of 253 and you're receiving the debit of 114. Can someone please tell me what is the difference here? 253 minus 111, 140, right? 140 is right, maybe round figure.
Yes, 140.
Now, so what I'll do, I'll take to the calculator. Okay, so now what I'll do, okay, anyways, 253 minus 114. Okay, so unless and until this 253 becomes 139, I'll be not doing any adjustments. So I'll let you know why. Okay, I'll go to this profit and loss. So now this has become almost like 145, close to my 139. So there is a difference of only 5. So almost we are at the end of the day.
It should be 111, not 114. 253 minus 111.
Yeah, what did I do?
114.
253 minus 1, yeah, it doesn't matter. 2 to 3 points, right?
That's just one.
Yeah, 142. So that's what one. See, it's not a clear benchmark. Either it can be 135, like 150. So I'm just taking maybe. So now the moment this becomes 142, so that's where my trade will start showing me the loss. That's where we see this loss of 1025. So now what I'll do is like, now I have to think, right? See, basically my view when I was actually deploying the trade, I might have done some price action and everything, saying that okay, market is bullish. That's the reason we go for this debit spread. Okay, so now Thursday is done, Friday is done, and even 31st, that is Monday. So Monday, end of the day. So we have basically, I'll show you, right? We have deployed this trade on when did we deploy it? We have deployed this trade on 27th. So 28 is done, 29th, 30th was weekend, and we are on 31st, that is Monday. So we have 1, 2, 3. So we have 3 more days. Okay, so now I have to decide basically, okay, I thought market would be bullish, but now it is sideways. Okay, now what I'll do, even this has met my criteria, 145. So that's the reason my loss is like started at 1025. So can someone please tell me what is the first adjustment what we do? You all guys know, that's the reason I told you to watch it.
Strangle.
Yeah, that's a good thing. Okay, I'll show you each and everything. Okay, so where is that? So basically, yeah, first we'll see the this thing. We'll just convert it to Strangle. So what I'll do, I'll just book my loss. I'll just book my loss, the buy position, and then this is playing at 44. The premium is at 44. Just to convert it to Strangle, so I have to either go for 44 or less than 44. So whenever we are selling the put, we should ensure that we are not going above 44. Okay, so now what I'll do, I'll just watch out for 40 or 44 rupees premium on the put side. So 44 is there, so I can go for 36. Just for taking the example, I'll go for 44. You can match it, but ensure that you're not going behind the 44 or 45, because you know that especially on the call put side, you should not be going more than that. Call side you can match. Call side you can also go that. I'll tell you this on the next Sunday buy. So I'll just buy or sell this. Now this is your typical Strangle. Okay, I'll not do all the adjustments. I'll just take you to the next day. So now tell me, I should have said, see now your Strangle will give you 1,200. Just tell me one thing. The moment you have converted it to Strangle, so are you still looking at the profit, or you want to come with zero loss? This is very important, because you have deployed the debit spread with a view of market going up. Now 3 days are done, almost like 2.5, 3 days are done. Market is static, but now if someone is looking at the profit, see, I mean, that's what I've taken the question related. So are you a conservative trader? Are you a aggressive trader? It's not even, I would not say that people who are still looking at the profit, right? It's not, I mean, not fair to say that you should not be looking at the profit, but just in case if someone is starting your trading career, right? So now your view went wrong. You thought market will go up, but market remained center. So now you have to look out for reducing this loss. What was the original loss? I think what was the loss actually? 3,000, right? 3,500.
3,200 something.
Right. So now even I would be happy if my loss is, let's say, 1,500, 800, right? I'll be not looking out for this profit. If you want to look out for this profit, I can also increase this profit. That's what we are going to discuss in our next time. Right? But now what I'll show you, I'll just take you to the next. I'll not even take you to 30 minutes. I'll just take you to the next day. Right. Your loss has reduced to 48. Okay, next day you got with 500, and end of the day, right, you got with profit. I'll not even give any importance to this profit. Now majority of you guys might be thinking that this guy know the view of the market, and that's what he's showing. See, I'll be showing you the live also, but just to explain you, can someone tell me how to increase this profit? Okay, I'll take you to the next one day before. So we are on Tuesday. Okay, we are on Tuesday at 3 p.m. So how can I increase the profit here for the aggressive traders? This is
by rolling down this.
One second, what is it?
By rolling down this.
जो कि सर सेल लेग में हाफ प्रीमियम रह जाएगा, उसको थोड़ा क्लोज ले आएंगे और दूसरे के मैच.
So there are like multiple options here. There are multiple options here. Either you can roll up, or else you can increase the quantity here, right? Whatever sold positions you have, you'll be increasing the quantity. Or else if you feel like market is like sideways to vary, so do you need like 2.8%? Check the blue line. This is very important, right? This is very important. So the blue line is giving you safety of almost like this. You have to check, right? This is a riskier trade, because end of the day you are looking to mitigate the loss, but still you have a very good one second, let me reset zoom. Okay, see, still you have a range of almost like 3% on the upside and almost like 2.5% on the downside, which is a decent, right? But still, if someone is worried, right, exit the trade. That's it. If you're worried, next day, Thursday, we all know, right? Wednesday and Thursday, our market will be like very volatile. What if market opens 10% circuit, 20% circuit? So then you have to exit, because you were able to mitigate your loss of 3,500 to 300. Okay, this will be your brokerage charges. I mean, that's it. If you have fear, you can just exit on 330. 320 or 325. But if someone is aggressive, saying that based on the price action, looking at the past history market, see, honestly, I'm telling you, I might be wrong. Tell me one thing, guys. Whenever we have the expiry day, right, do we see like 2% of gap up on the expiry I'm taking? Do we see 2% of gap up or 2% of gap down, and then the market will come into middle, or it is something like 0.3%, 0.4% of gap up, and then followed by 1% down, 1% up, and everything? That kind of market. Can someone please share your experience past like maybe 1 year, 2 years? especially on the expiry day. This is the reason I keep on asking you all those polls. Based on my experience, what I see is like majority of the time, it will be 0.5%, 0.6% gap up or gap down, and then all through the day, it will be very volatile. So from 0.5%, it will go to 1% again. It will make a low again. It will. So, are you guys with me, or do you guys have altogether other experience? Only on the expiry day, 9:15 till 3:30 on the expiry. Can someone please share your experience? Are you guys on mute or what?
Yeah, Ravi, generally what I saw is expiry day, it will not be volatile. So it will be sideways. Like
Yeah, now it is. Yeah, now it is. But yeah, still,
Nowadays, Tuesday and Monday are very volatile.
right.
So stop loss hits on Monday, either on Monday or Tuesday itself.
Okay. So now basically it's up to you. So that's what, right? If you want to, even if it is like 500 loss also, I would not mind taking up this loss rather than having a piece of night sleep. So what I'll do, I'll exit the trade at 320 just because we are getting 530, or else if someone is aggressive, right, you can just go with multiple quantity with a big range, you can get the profit. Now what I'll do, I'll show you one more adjustment, right? This we have seen. Okay. See, if I delete this thing, ideally, well, let me get it to 0. If you have not done this adjustment, you would have been in a loss of almost like this loss, right? 2761. 2nd November, right? Sorry, my bad. 2nd November, and then the 3rd day you might have been with a loss of almost like 3,546. So again, I'll take you back to what was the day we did first, 31st, right? If I'm not wrong. Now, what is the other adjustment we can do? We have discussed about strangle conversion. Can someone please tell me what other adjustment we can do? What
Living
if,
in a naked position.
yeah, what if I yeah, even I'll show you this thing. What if I exit this buy position? That's it. Exit this buy position. So then I'll have my only sell position. So original loss was 3,000, but at least now if you look at your loss is only 338. Even this is, but now if you guys start seeing, right, why we see loss, already our debit spread is giving almost like 30 to 40% of the lot. So that's the reason you do not see. So even I'll show you this thing also, because see, tomorrow you will come across this type of one, because we are taking a very recent week. I'm not taking you a very good example. So I could have shown you this thing also. 1 second. I could have shown you this example, right? By just taking a debit spread here. I know this will give you the profit. I'm taking this sideways so that you guys know like what all adjustments I can do. Let's say if someone has done this adjustment, exited the buy, check the range. You have almost like 2.32% safety on the upside. Downside, you should not be even kidding. But this is risky. Check the blue line. I could have easily shown this, but check the blue line. Right, blue line is very steep. What did I say? If you look at the blue line, if market makes like 1% move, like 0.5%, your MTM losses will be showing you. Let me show you, right? Let me take you to the next 1 day. Second, let me take you to the 1 day. Your loss is 1,000 change. Next day, right? Your loss is, because market is standing flat, and we get this kind of market conditions n number of times. And next day, we are on the 2nd, your loss is 272. Next day, we all know, right? My loss would be only 85 or something. But just in case if someone want to do the adjustment, they can go for this thing also, right? I'm just showing you all the this thing. I'll get this back. Someone said what? Ratio spread, right? Okay, this is your 31st. So what you have to do is, so what is the loss now here? Loss is let's say 3,500. I'll go for 3,500 divided by 25 lot. So 140. So do you want me to collect all this 140 at once? Because we are on 31st October. We have another 3 days to go. So what's your take? So are you guys comfortable taking 140 credit in such a way that you'll make your trade green, 0 loss on the put side? We all know market is standing in the center, flat. We all know even if you do that, my loss will be 0. So what is your take? So do you still go with 140 or you'll go in installment basis?
I will go with
Installment.
But yeah, don't take this market into consideration. Don't even see, forget that. I'm just showing you this market, but think like a professional, right? Let's think that 31st October, don't have this view of the market. Just think that you have deployed a debit spread 3 days. On the end of the third day, your debit spread stands here. You have a loss of 3,500. So now, if you think about this view of the market, definitely you'll say that, okay, go for 140 because you know market is sideways. So what I'll try to do is like, basically what I do is like, I go by 2 installments. So what I'll do, I'll just try to sell a call worth 70 rupees. I'll show you. Okay, what I'll do, I'll go to option chain. So wherever I have like 70, 75 rupees, because I want to go in 2 installments. So I do not have, let me take the 69. I'll sell this. So we all know the moment we sell, our loss will be reduced from 3,000 or half of the, because we have sold additional 69. So you all know, right? This calculation 70 into 25. So you were able to mitigate your loss of 1,700. That's the reason you see loss. Now I'll take it to the next day. Okay, now my loss is only 1,000. Okay, so we are on 1st of November. So do you guys do any adjustment now? So we have to cover additional 70 rupees. So do you go for 70 rupees at once, or you again divide that 70 rupees into 2? Because what if market goes, see, if you make it 0, right? So still you need to have the scope, right? Unnecessary, you have to put the extra margin. So what is your take? Do you go one time by selling one more 70, or else exit this and whatever premium is left on the table to make this trade 0, go and sell that naked call? I want to hear from you guys, because today is 1st November, almost November end of the day. So we have 2 more days. So don't you think you'll get up with this real trades? This is the way, right? So you have 2 more days. So what will you do?
Sell one of 33, 35.
Okay. Okay. And what would be the other thing? But let's say,
I will close 42
I'll
300
tell you one
CE
thing.
and I will sell 41 900 CE.
Yeah, I'll tell one thing. What if the market keeps going down? So then, do you get any premiums from on your call side? Okay, let me show you, right? Let me show you one thing. I'll go to option chain. Okay, let me see. For that, I think I have to exit this. Okay, let's go to profit and loss. So you have 41 rupees premium still left. Okay, so you got 69.70 and you have 41. So what if I sell 70 rupees, will this become 0? Guys, if I sell one more 70 rupees premium, will this become 0? Because end of the day, we are capturing this thing, right? 140. I'll go here. I'll try to sell one more 70 rupees premium. Let's say 74. So will my payoff become 0 loss on the put side? Anyone want to take a try?
Yes, almost.
See, it has become almost 0. Okay, so now either it is like 0 loss, or market has to make a movement to say break even is like almost like 1.18%, if I'm not wrong. Yeah, 181, almost like 1.28%, and your maximum loss would be within this green zone. So let me take you to the next step. See, I think you all guys knows this adjustment, but still I'm just reiterating one more time. That's it. So you came up with 32 rupees profit, which is like your brokerage. Again, I'll do one thing. I'll just get it to this thing. Now, I'll tell you one more adjustment. I think you guys know 31st October. I'll delete this one. I'll delete this one. What if, see, end of the day, I have to cover 140 points. All right. I have to cover 140. So what I'll try to do, I'll go to option chain. I'll try to cover 70 points from put. I'll divide it actually. I'll divide it. So I do not have the 70. Let me take the 66. We'll try to sell one 70 rupees put. And also I'll try to sell one maybe 70 rupees call. How will be my payoff? Because end of the day, see what I need basically, I need to cover 140 points. It is not mandatory that every time I have to cover it from the call side or from the testing side, from the opposite side. For me, end of the day, I have to just cover 140 to make my trade green, lossless. Okay, so how will be the trade? I mean, payoff. Can someone visualize how will be the payoff if I'm just selling 70 from put and 70 from call? Can someone visualize the payoff?
No loss. It's a kind of strangle.
Straddle, it will be a straddle.
See, this is how it looks. Okay, so all loss is almost zero. Okay, you still have the potential of good profit, but you have the safety of almost like 2.3%. It's up to you. See, basically, I'm just showing you all the adjustments. This has to be clubbed with your price action. See, I'm not, see your price action. Let's say my price action says that still the market can go up. Still, though market was like sideways for 3 days, but Wednesday and Thursday, based on my price action, market has still the potential to go up. But downside, I mean, I doubt whether it will come down. But still, I'm giving the safety of how much, like 2.3%. Though your blue line is steep, maybe the moment the market falls down by, let's say, I'll show you, right, by gaps down by 1.4%. So you will have 4,643 loss on the T plus 0. But still, if the market expires here, your loss will be only 165. See, anyways, we will be discussing very deep on the Sunday class. But just in case, if you have any trader who's like new to debit spread, just try to digest it, guys. I mean, we are going to brush up all those things now. See, we all know, right? Our loss will be only 33 rupees. Even I'll not even take you to the next day because the market stays flat. Okay, so now, if at all you want to increase this profit, what can you do? If I'm an aggressive trader, I know that market will not come down. Even if market comes down, so there is a strong resistance, so strong support maybe at this position. Let's see, even if Bank Nifty falls down, so there is a very strong support. Bank Nifty can take a U-turn. So still I am sideways to bullish. To just get with this profit, what can I do? Right? You have this area. If I want to get some profit in this area also, let's say I want to get some brokerages, or else let's say if someone wants to get some biryani, this thing, because you have put so much of effort, right? I want to get some small part payment. What can I do?
Sell one 41,500 put.
Right. Simple,
Sell
right? Simple,
one
right?
41,500 put.
No, I can just make it to 2, right? I can just make it to either this 2.
Increase the number of
Yeah, quantity can be increased.
Right. So what I'll do, we have like 40,400, right? So this doesn't allow. I'll go here 40,200, right? If I'm not wrong. 40,200. This is what was that actually?
66 premium, sir.
66 premium. Okay.
40,400.
This one.
Yeah, correct.
All right. So I'll just go for 2 lots. So this is a bit of aggressive. Okay. For all the aggressive people, right, who are like very good at price action, if they wanted to take, right, simple. So this is how your payoff will become. So on any given day, so your minimum profit would be like 1,486, though you have to increase. See, that's what did I say? Option selling is all about having extra capital. If you have the extra capital, this is the way all the big players who have like huge capital, right? So they never get into loss. Even on the expiry day, even on the Thursday, they will just deploy the additional capital in terms of coming up with 0. That's it. For them, they'll not give the money to the market. Now you will get 1,400. Even if I take you to the next day, the market stands here, so you'll get your profit of 1,000. Just if the market goes up.
Ravi, what is the suggested capital you would like us to have?
It depends on your expectation.
No, for this setup.
Zero loss. Yeah, for this setup.
Achha, for this setup, right? So
Yeah.
I think this is a sort of, right, debit spread will take 29, not 5 lakhs. Yeah, somewhere. So we have like 2 sold position. Yeah, somewhere like close to 3 to 4 lakhs. And just in case if someone wants to reduce the margin, you all know, right? Basically, we are selling 70 rupees and we are selling 70 rupees. I've made a video wherein you can just drastically reduce your margin just by buying out of money like 5 rupees or 10 rupees.
Yeah.
Right? Your margin will be reduced like anything. Believe me, like it will reduce to 50% also. So net, what I would say, see what happens. See, whenever you're reducing the margin, right? So let's say you're giving like 5 rupees. Okay, 5 into 25 lot. Let's say. So 125 or 5. See, at max you'll be giving like 250, 500 rupees, but your margin will reduce. So you have to watch that video. If not, we will discuss about the live trades also. So this is just an introduction, guys. We are going to repeat everything on Sunday just to keep up that momentum. Now what I'll do,
Sir, already we sold two put options, sir.
Mhm.
How about put them?
Your voice is
Correct.
Because
your voice is
already for one lot it will take
1 lakh.
for one lot it will take 90,000, sir.
Mhm.
So if we sell call also, it will take 1 lakh only. So how about selling one more call, OTM, deep OTM?
So you want to retain this two and take one more call?
Yeah,
Yes,
that's
sir.
what
I
he's
want to
saying.
add the one more.
Okay,
So anyway, it will
42,100.
take 1 lakh only. So
So you can edit from there also.
No, that will not allow.
That will not allow.
What was the strikes? I mean, this is what I'm
60,
bad at.
60 rupees,
Bad at
70 rupees.
600.
42,
So I'll go for two lots. Okay. Now tell me what will happen. See, this is what you guys have to think. Now you are adding, right? You're taking two lots. So do you see the additional credit what you're selling, that profit will get added to your put side, or within the green area will increase? Whenever I'm just
Green area will increase.
green area.
Green
how
area
about,
will increase.
how about put side? Put side will stay same.
Put side will
Put side
also
will stay
increase.
Side
stable.
also.
That will
No,
stay.
put side also it will increase.
Break even will increase.
How can two things be possible? Either it can be put side or it can be green side. I mean, you're just getting how much you are spending.
The
70
70
rupees.
rupees break even will increase, right? Both
Right,
sides.
70 into 25.
Break even will increase. Yeah.
1,750. Let me show you. Let's see. It has almost doubled out here. Okay, so this is but I preferably I go for this adjustment only on Wednesday end of the day, guys. This you should keep this in mind, because you have 3 more days. You are exposing your capital for 3 days, though you have a good range on the board side, but still your capital is exposed. I'll not do this on 31st. Rather, I'll do it because 3rd November, right? Rather, I'll do that on 2nd, maybe
3
after
o'clock.
11 o'clock, 12 o'clock, because I'll be monitoring, or else at the end of the day. But by that time, do you see that you'll be getting the premiums? No. See, for each and everything, there will be like consequences. So it's, see, now you might be getting good premiums, so you'll end up with the low capital. But on Wednesday end of the day, the premiums will reduce. To get this much of safety, you have to pump in more money, more capital. Yeah, but if you have additional capital, you can do this adjustment. The only thing is like today's premium, that means like Monday premium and Wednesday's premium will have a huge difference. So that you will get to know only when you do the real trading. And I think we have all the full-time traders. Okay, so now let's not waste, because I want to show you one more good thing. So this all things I'm just repeating. So we have good, right? We have like 100 participants, 100 place. Okay, now what I'll do,
Wednesday
One
evening.
small doubt I wanted to ask: should we keep any stop loss for this? Suppose it is going against us. So put will
see, I mean, stop loss, I think you need to go for what is that? The algo trading only, because you cannot deploy the stop loss, right? End of the day, we have the 4-leg strategy. If you see, I've never put the stop loss because this is a 4-leg strategy, but you can put the stop loss on the extra selling what you're doing based on the premium. You can put the alerts, you can put the stop loss. Yeah, because basically this is your debit spread. On top of debit spread, you're just putting this thing. I think for this we can put the stop loss. Yeah, because ideally I do not go for this naked strategies. I just go on Wednesday end of the day. So I have to manage only for overnight. That's it. Because the beauty, you will not understand this blue line right now. The blue line is something, it is like this, right? But Wednesday, the blue line will be something like this. I give more importance to blue line, maybe not exactly like this, but something like this.
Closer to the green zone.
I'll have my stop. I will have my safety here. On Thursday, I'll have my stop loss here. So basically, on Thursday, I can manage the trade because 2% market I can monitor with my naked eye. Okay, this is one of the adjustment. 1 second. Now, delete.
So you deploy put debit spread.
Anything, see, it's up to you. Okay, now what I'll do, I'll show you like now. So we are on day 2. So what if I deploy a straddle over here? Okay, simple. I'll show you. Because market is, your view was market will go up, but for first 3 days the market is at the static. Now there will be like only two takeaways. Either this is very critical. You are on Monday, end of the day. Market was staying at the same position for 3 days. There are only two takeaways. Either market can go down drastically or else market can come drastically upside, because 3 days market staying at the same position or just making like it is making this kind of moves. It is going 0.5%, 0.2%, 0.1%. So this is a sideways. Okay, now what I'll do, my takeaway would be 3 days market was silent. So maybe I'll think even it can make a down movement of 2%, or else it will make an upside movement of 2%. If it makes upside movement, I'll be able to do the roll up. I'll be able to decrease this loss and then make my trade good. If it comes down, okay, so that's where we do all those strangle conversion, ratio spread conversion. Strangle will give you some sort of risk, because 2%, you see, this is what, right? It's not so easy to say that the moment your debit spread is giving loss, go ahead and do the strangle conversion. You have to know what if market gives 2% downside move. This risk you should be able to make. Your strangle getting 2% definitely will come into the MTM losses. So don't see, whenever I make all the videos, right, I keep getting emails, I keep getting this thing, right? I have a ratio spread, the market is standing exactly at the same position. So can I go ahead and convert it to strangle? I'll be not able to answer your question, because there are like so many things. First is what is your expiry? How many days you have for expiry? What is your MTM? Is it in profit or is it in loss? Okay, what is your view of the market? Your view is important, right? Blindly we cannot go for strangle. Now what I'll do, okay, now I'll show you one thing. What if I deploy a straddle? So where is the market standing now? Market stands at 41,450. So I'll see where 41,500. 41,000. Check the premiums. Okay, 370. Let me take this thing. Okay, I'll just sell the straddle. 41,400 and I'll sell this. Okay, this is how your trade looks. Right. We all know, right? We all know, because we have seen this market condition. We all know, but just imagine you have deployed a straddle on top of your debit spread. Looks good, but check you have unlimited loss, right, at almost like 1%. I'll not do this, but still I'm showing you. But at least my call side is safe. Check the blue line. Your blue line is giving you safety till, this is the way I keep a check on the blue line. Your blue line is giving you safety till this point. But check your put side. Your loss starts right away from because this has already breached the blue line. Okay. Even we all know market was sideways, so this will give you definitely profit. But still, I would not recommend you guys to go for this thing, because do not keep your put side exposed to unlimited loss. At least you should have some sort of, I would be okay if you have the mirror impact, right? This side, if it is on the put side, at least I can take the risk, but I'll not take. Though 1% is a good thing, but still, we never knew, right? I'll take it to the 1 day. Needless to say, this will have huge profit, because this thing, right, we never came into loss, because 1% is, that's it. So you got up with profit. 10,000 is a huge profit, but at a cost of art attack. I think if you're just playing with one lot, you can just hold. Let's imagine you're playing with 10 lots. You're playing with 100 lots. We should not be going for naked, but still I'm showing you. Let me take you back to 31st.
Or a sort of gambling.
Yeah, sort of gambling. Yeah, see, I mean, majority of the see, not gambler, but you should be okay to take the loss. You should be like very good at price action. See, end of the day, price action is end of the day. It's not a prediction. You should not predict. You should have the view of the market. Now, what I'll do, can someone tell me, if I don't want this unlimited loss, what can I do with this?
Broken wing, iron fly.
Broken wing, absolutely. Yeah. So
yeah, that's a good solution.
I'll just go for buying a put, right? So what is the premium you got? 370 and 300. So almost like 600, 700. Let me go and buy 600 or 700. What is that? P by 41,400. 41,000, 1, 2, 3, 4, 5, 6. Let me go for 600, right? And buy this. At least this will give me a sort of peace of mind. That's it. Though we are exposed to loss, right? Which is almost, but this stands good. So what happens is, have you noticed this profit before we add this? Like, so there is a reduced in what do we say? Your profit. 13,000. Good. That's a good catch. But are we looking out for profit now? See, actually, you should have told me why the hell you are showing all these adjustments when we could have exited the debit spread with a profit of 200, 300. But still, I'm showing you because this is where, right, we went for bullish view. All of a sudden, what happens is like everyone changes their mindset. Okay, next first 3 days it has not gone here and there, so let's go and deploy a straddle or a broken wing fly. Okay, let me show. Right, you know, right, we will be getting almost like 10,000 profit every day because market went a bit down. The next day again it came 0.5% up. That's it. So your profit is almost like maximum profit. Now again I'll take you back to 38th first. What are the other adjustments we can do?
Ravi, I had one question.
Back ratio spread.
Yeah, go ahead. Your question.
Yeah, ideally you look at the price action and then deploy the debit spread, or you deploy it on Thursday only.
Yeah, so I go for, let's say, see, and that's a good question. Let's say this is where the market stands. Let's say today's Thursday. Okay, just assume today's Thursday. This is where the market. See, check the price action. What did I say? If you look at this pattern, right? So this is taking resistance 1, resistance 2. This took resistance 3, and now the same line it is taking resistance 4. So now, if I want, I can go for. I'll definitely go for CE ratio spread here because I'll tell you why. I pretty well know that even there is a strong resistance here, and even if this goes up, this will act as a strong resistance. And if this gets breached, then market will make the all-time high. Just to make the all-time high, it is not easy for market to breach this, right? It will play for some time here, but if it gives a breakout, it can be a false breakout, and then again it will come down. It might come here, or else if it is a right breakout, then it will go up like anything. So now, this is a tricky position for me to go for even call ratio spread. But let's say what happens if this gets breakout, if it gets retest, and if it gives a big move, my call ratio spread will come into huge loss because my call ratio spread will be something like this. You all know. Okay, this is a market stand, so I'm safe till like 1%, 2%. The moment it has a big, because my blue line will be something like this. As and when the days goes, my blue line will give me more safety. Monday, Wednesday, Thursday, like this. But what if the next day market gives a movement of 2%, though the market is within my green range, green area, but the blue line is not supporting me, so I use huge MTM losses. So now, to answer your question, right, this is a very tricky this thing. So what I'll do, I'll not expose my capital now. So I'll not even go for call ratio spread. Okay, I'll not even go for iron fly. Rather, I will go for a butterfly, because you know, right, the butterfly will have very less loss. And if you say my loss would be only 1,000 here for one lot, my loss would be 1,000 here, and I've still have the potential to get 10,000 profit. So I'll deploy something like this, right? I'll go for what do we say, the directional butterfly. Market stands here, right? I know there is a strong resistance, so market will either come here. I'll be able to trap the market. See, I mean, I'll be not able to answer all those questions, but this is what we are going to discuss on Sunday. That's a good question you have asked. But again, there are like or else I'll go for, let's say, a debit spread, call debit spread, right? If it goes up, my call debit spread will give me profit. If this comes, if this goes up, if this gap breaks down, and if it comes down, so then I'll start doing the adjustment, because I know I was bullish about the market. So market did not, it break this resistance, this resistance got respected, it is coming down. So then maybe somewhere here I'll start doing the adjustments. So it's the same adjustments what we have discussed. Either it could be converting it to ratio spread, converting it to a strangle, or I'll go for, someone said back ratio spread, right? Who is that guy who said back ratio spread? I mean, I think he's watching my videos, I believe, right? That is one of my favorite, but very risky, Let's do that on Sunday, all those simulations. Okay, now
Ravi,
yeah.
Ravi, why can't we deploy a put spread?
Put debit spread, right? Achha, you're talking about this.
Exactly.
You're talking about this market condition. Yeah.
Correct.
Yeah. You can. So that's what, right? You can go for put debit spread also. But what if market? That's what, right? It can be call debit spread, or it can be a put debit spread, or else I would say you can go for this thing also. What do we say? You are iron fly. Seriously, this is a very tricky position. Even you can go
Because
for iron fly.
put debit spread we can manage very easily, because on the upside also it will give not that good profit, but slightly good profit, and the downside we are fully protected.
Right.
Because
right,
it is at a confluence zone.
Right.
We
Yeah,
can
you-
have
you-
the put spread.
Yeah, you can go for put debit spread. You can go for call debit spread. You can go for even I would say you can go for the put CE ratio spread. See, I keep on telling that always make this kind of trades on the put side, right? See, at times based on the experience, what you do is like even you'll go for put ratio spread also, but you should have more safety like this, something like this. It's not, see, you should have more safety. So try to have some loss here. Whenever you have loss on the put side, you will get more range here. So on the call debit spread, let's say we take 4% or 3% range, but always in the put debit spread, your break even should be 5 to 6%. So you have to sell the second sell position, right? You have to sell like deep OTM so that you get more range. We will discuss everything, but you have to have loss here. You have to have a loss here so that you will get more range on this. This is what the pro tips we are going to discuss. And also I want you guys to share your experience. And guys, believe me, so even see, I mean, I could be not able to answer few of your questions if it is like very advanced. I mean, hope you will just understand my situation, because it's like 6 or 8 months of experience, but I'll try to do. But some advanced questions, right? I want other guys to also help me out. Yeah, someone was asking some question.
Sir, can we sell 2 lots to get the range in the put side? Selling, second selling, can we put 2 lots so that we can get more range instead of 1 lot?
See, that's what those 2 lots should be deep OTM. If you are selling 2 lots, right?
So that
See,
we can get
ideally,
range,
ideally, I will say it should be 1:1, not 1:2 for sure on the put side, because that will give you huge panic. Yeah, one buy, one sell, and deep OTM sell just to mitigate your loss of the debit spread. This is like almost like the second sell. What you're selling is, you know, why we go for ratio spread basically. This second sell, right? Whatever the second sell position you have, right? Maybe you have something like the second sell position is just to do the adjustment in case if your market goes up. This is the only point wherein you can just roll up so that you'll be able to mitigate this loss slowly. You'll be able to make your loss zero. I'll tell you the basic purpose of going for 1:1 is on the put side is, anyways, this is OTM. This will not give you huge panic. Second thing is like your loss will be mitigated by whatever extra credit you're paying. So that let's say you are going for 30 rupees, 30 into 25, simple. That will be like reduced from your loss. We will discuss that. And what did I say? Okay, let me get you back to this trade. Yeah.
Sir, I have shared on my live trade payoff chart in your WhatsApps. Can you please check that one?
No, see, honestly, I'm telling. See, I mean, even I started getting all the emails, but guys, trust me, I'll be not getting. See, first we'll discuss the context, and then I'll get your WhatsApp. This first,
actually, what I have done, what I have done, I have sold 42,700 3 lot. Okay, but for contra, I have bought 43,000 at 5 rupees 5 lot. Okay.
See, honestly, I'm telling. Sorry for disturbing this. I don't understand. That's what even I've told 3 to 4 times. If you ask me, I sold 42,000 for 10 rupees, 40. I'll not able to understand anything unless and until you show.
Chart, sir.
Yeah. I'll get that. I'll get that. Yeah. If you show me the payoff. Yeah.
In WhatsApp, sir.
Yeah, we'll get that later. First, let's discuss this thing. And so we have discussed like 5 to 6 adjustments. Now, yeah, someone said back ratio split, but back ratio split we'll discuss on Sunday. But back ratio split will be like very tricky. Any other trade what we can deploy? You know the market view. Any other strategies to?
Ravi,
yeah?
What if we deploy put debit spread
payoff graph? Okay. What if we shift 42,300, which is already in profit, one step down or 200 points down?
Yeah, absolutely. We can do
that. We can book this. we can book this 42,300 and we can go to 42,000.
Yeah, 42,000. Yeah, that's that. But let me show you that adjustment also. What I'll do, I'll book this profit, right? I'll book this, and then we can just go for what do you say, 42,000, right? But the thing is, like, we have to check the premiums are there or not. Yeah, if we get some good premium, I think we can do that, right? 42,000. Okay. Right, 42,000.
54 rupees we are getting. Then we can,
it is 2 lakh, no
we
sir.
can,
But will you be okay to go for 2 lots? See, this is what happens.
Oh,
Now,
sorry.
this will almost become like a, that's what, right? Because our trade is already in loss.
because we will have just 1,000 rupees more loss.
Yeah,
Now,
by taking a risk. Yeah, by taking a risk. But see, your losses, are we doing the same right thing, right? We have booked the profit. Are we did 42,000? Okay, someone said to increase the lot. Right? So what will happen if I increase the lot?
it will come down. It will be around 800 rupees or 700 rupees loss.
Loss will come.
Okay, let me do that, right? Let me do that, right? Let me go for 2 lots. I mean, you got it right. Yeah, that is one we can do. But the only thing is like, that will expose your losses also. Any other trades, guys? Any other trades you want to just?
Can we convert this into butterfly and let us?
Butterfly, yeah, butterfly. So you have to tell me what is the strike you have to select. So butterfly will not give you bigger range. Okay, so maybe you have to be like very, because you have a big range, right? So this is your range. So you have to either go something like this, or maybe something like this. So you have to be very good in terms of selecting the legs, or else your butterfly should be something like this. So now you tell me how will you deploy the butterfly? For that view of the market is must, right? No one is telling about the view, right? That's what. See, we can go for everything, but the best thing would be, I would say, converting this to ratio spread would be the ideal position, honest and telling. Then you look out for some contra trades, and if you have some options, so then go for strangle, but only on Wednesday during daytime or Wednesday end of the day, because we never know when that black swan event will come, when the COVID will. Yeah, we should not have fear, but yeah, if you have already made good profit, let's say your equity curve is something like this, right? You've already started somewhere here, you are already in profitable this thing, so then you can take the risk in terms of deploying the strangle. But let's say if someone is starting the trading career and he went and deploy the strangle, that's it, is capital, you will not even come into market. It all depends. Whatever loss we are giving, it has to be from your profit. So that's what I keep telling. First, go as a conservative. See, when I say conservative, forget about this profit. That's it. First, gain the experience. So to have this kind of equity curve, you have to spend good amount of time. I would want you to go this way. Don't even go this way, right? Your equity curve should be flat. That's it. Your capital should be intact. That's what I keep telling. Let's take it very seriously. Your capital should be intact. If your capital is in, that's what from 1 month, let's say 3 months, if someone is not giving a single penny to market, and if you're trading the market for 3 months, you are already close to success, to trade as a successful community. If 6 months, you are pro trader, that's it. If someone has not given, so if someone asks me, I've given a single penny, I've not even given 1 rupee to the market with my last 8 months of experience. Seriously, I'm telling. I mean, if I can do that, if I can get that done, anyone can do. But though I have like 50 lakhs of margin with me, I've never deployed 50 lakhs. First, I've deployed 2 lakhs. Then slowly I made it to 3 lakhs, and then it's like 5 lakhs. If you look at my last month, I was in some crisis actually, because due to some medical. So my account again came back to 2 lakhs. But this is the good thing what I've done. I mean, I think there are like majority of the trainers, I believe, I usually keep, I mean, I don't lift the call because I'm not a full-time trader, but even today I've discussed with one of the guys, whether I'm not sure. Neeraj, you're there on the call by chance? I've discussed with Neeraj for like 10 minutes, I believe. Randomly, right? Someone calls me. So that's what I keep telling, boss, do not look at this profit. At least for if you are a pro trader, then you can look out for the profit, but as a starter, focus how to mitigate this loss in installments. That's it.
Ravi, one more thing I want to tell. If we close this, now we need we are not looking to profit. We are only looking to make it to less loss or a zero loss. Okay. What if we come inside, close 42,300 and sell 41,900?
Okay, let me see you. Right, you want me to close this?
Yeah, close this and sell 41,900.
It will increase the range.
41,900 you say. One lot?
Yes, one lot, yes.
Right.
So this is one is not closed. I think so. This is not closed. Yes.
Okay, what was the amount? Sorry.
22 rupees or something. 21.
Can someone visualize how will be the payoff? How will be the payoff? I'll just give like 5 or 10 seconds. Just try to visualize the moment we do this adjustment. How will
that will have a bigger range?
2.5
bigger range
in loss.
Let me show you.
No profit. No profit.
Straddle will have a good straddle.
2.5 loss.
See, I would what I would recommend is like, I mean, rather than we see, that's what, right? No firefighting. Just accept the loss and go for some contract. Yeah, even this looks fine, but check the, I mean, the payoff doesn't even look good. Right? Even the market has to go up, so unnecessarily you'll get into loss. The best thing would be like ratio spread by just taking credit in the installment as and when, because we are still on 1st of November. So we have like 2 to 3 days, but still, yeah, we can just go. It all depends on individual trading style, but I would not go for this thing. What I will do is, rather than deploying the margin, so I'll just go for some contra trades, or maybe I'll just try to deploy. See, now this is on the bank Nifty, right? So I'll take some contra trade in the Nifty to mitigate. That's, yeah, let's discuss everything in the upcoming session. So now now the accent, I want to show you one thing. It's already like 1 hour, right? We started at 9 p.m.
Yeah, 1 hour.
So I'll do one thing. Okay, I'll do one thing. I wanted to show you one thing. So we have good participants. I did not expect like 95 people will be joining. Okay, what I'll do, I'll show you one which is not at all the part of my trading course, but let me show you, right? Okay, what okay, I'll do one thing. So this is my debit spread. Say call debit spread. Let me take you to the day 1. 28 October at 3 p.m. we might have deployed this trade, right? Hope Opstra doesn't start. Okay, so 0 0. This is what we have deployed. So now what I'll show you one trade. So wherein, okay, so we have 253,111. I'll just how to reduce this loss. I want to go for a sort of debit spread, but I want to reduce this loss on the day 1. How can I do that? We already discussed, right? So maybe I'll sell.
We have to go OTM.
Yeah. So 111 was the sole position what we did.